This is Money Made Simple, the financial podcast that keeps it simple and gets to the point.
Kia ora and welcome to Money Made Simple. Jennie here with our very special guest, Colin Magee. Hi, Colin.
Hi, Jennie.
Hi.
You've back.
We're very happy to have you. You've actually been on the podcast reasonably recently, speaking to Liv about stock exchanges.
Yes.
I actually found it very interesting. You covered some of the history, some of the different stock exchanges around the world, and told us a little bit about your own business, Catalist, which is a stock exchange here in New Zealand. I don't think you touched too much on the rules and regulations around stock exchanges. But today, that's what we want to look at. We want to look at some of the regulations beyond just the stock exchange, but the industry more generally. First, can you just remind us a little bit about yourself and your background and why you can speak on such a topic?
Oh, yeah. So thanks for having me again. Got a background. I was originally a lawyer. I worked in the...
lawyers love rules and regulations.
Yeah. And I worked at the Financial Markets Authority, the FMA, for 5.5 years when I first came to New Zealand 11 years ago. Right. So when I was working in that role and prior, I've had a lot of experience in regulated markets and stock exchanges. I just think it's important for people not to be scared of investment. And one of the things that people don't really understand often is the way that different investments are regulated. It sounds really quite boring, but actually just knowing that little bit about how things are regulated can help you get that confidence of what's a bit safer, what risk are you taking when you're investing, because any investment has some risk, even when you're putting the money under the mattress or in the bank, that always has risk. It's just different risks, and it's important to know what they are.
Yeah, well, that's what Money Made Simple is all about. I don't know if you've listened to our podcast before.
Absolutely.
Well, great. Liv and I are hosts, and Liv is the one that's really interested in finance and got her financial act together. I am the resident financial hot mess. I do not have my financial act together, but I'm working on it. And I tend to glaze over when conversations with my husband or Liv move towards interest rates or anything like that. So a challenge for us today is to talk about regulations in a way that is interesting and relevant to people. And at the end of it, it would be great if all our listeners can go away and look at their own investments and their own financial service providers and have a better understanding about, as consumers, how they are protected or not and what that means for them. So
Absolutely.
That is
Challenge
our challenge.
accepted.
Did you have any regulation jokes when you were at the FMA about
I'm sure people don't want to hear jokes about regulation.
Okay, so let's start off with some of the sort of the key ideas or terms when it comes to investing in New Zealand, so we know what we're dealing with. We hear the terms licensed investment provider or regulated provider. What does this actually mean?
So this is quite a key one. So various different providers of investment services, so that might be your KiwiSaver fund provider or banks or actually even insurance companies, those have to be licensed, which means that normally either the Reserve Bank or the Financial Markets Authority is saying, yes, this business is up to the job of selling you that investment. It means that you can go on to the Financial Markets Authority website and check that they are licensed, and you can check that they're going to be up to that standard. Regulated, all that really means is that they're covered by rules which they should be following, and there will be a regulator, so the Financial Markets Authority normally, who will be checking, but it doesn't necessarily mean they've gone through any process yet to check that they're up to the standard.
Do you have to apply to be a licensed provider or to be regulated, or are these bodies out there looking for everyone that's providing financial services?
So you definitely have to apply to be licensed. You have to go through quite a rigorous process, as Simplicity itself will have had to have done to become a licensed KiwiSaver provider. We have this thing which is a financial service providers register, which all financial service providers are required to register on. So it's put their names on that register.
And that's public, that
that's
list?
public,
yeah.
But that just means that they're doing that service. So they're required to be on there, but it doesn't necessarily mean that someone's actually checked that they're a good business to be selling you an investment. They're required to comply with the law, so the regulator knows they're there and can go and check them, but they haven't necessarily been through a licensing process.
Right.
So I think the starting point is that if you're a beginner investor, if you're hearing about a business that you want to invest with, make sure that that business itself is licensed or that they're going through a licensed business. So that's either a bank will be licensed or a KiwiSaver provider will be licensed, or if you're investing in a company, they will be selling their shares on a licensed market.
And is there a difference between maybe smaller niche insurance companies versus big banks? Is it an all rules apply to everyone sort of situation? Or
Well, there's different rules for different parts of the market. So the banks have rules which check that they're going to be financially stable, which is why people tend to think of banks as a safe place to put your money. but it's still, you are taking the risk that that bank could go insolvent if it lends out too much money and isn't able to get it back when you want your money out, all the way through to KiwiSaver providers who are licensed for the service that they provide, the managing of investments, and my business Catalist, which is licensed as a stock exchange for trading. So it's all different types of rules, but basically it's checking that you're up to a certain standard and you're going to treat the customer fairly.
Yeah, the idea of treating customers fairly is actually becoming law next year, in March maybe.
Yep.
The Conduct of Financial Institutions legislation amends the Financial Markets Conduct Act from 2013, and that's to ensure that financial institutions treat consumers fairly. I'll add a note about that in the show notes if anyone's interested in, the specific legislation. But you talked about banks, and the Reserve Bank is regulating them to keep them financially stable, as you said. But how does that impact consumers? Do we need our banks to be financially stable? What's the benefit to us?
Well, absolutely. You think you put your money in the bank and you're always going to be able to get it out. I come from the UK, and I remember a few years back we had a few banks who you put your money in there and the bank had gone insolvent, so wasn't able to give you your money back.
And that happened recently in the States, didn't
Absolutely.
it? What was the bank, the Silicon Valley Bank?
Yes, Silicon Valley Bank. So, the bank wasn't able to pay depositors back, and therefore people can lose money. The Reserve Bank is there to make sure that banks are not taking too much risk so that they always do have the money there to give you back.
This is a bit of a balance, isn't it? Because as an organisation, Simplicity speaks out quite often about bank profits. But one of the arguments for having a profitable bank is that it is financially stable and that is good for consumers.
Yes, so you need your banks to be profitable so that they can always be sure that they're going to pay you your money back. But equally, we want to make sure that they're being fair to customers.
Yeah, so that's going into a couple of different sets of regulations, prudential and conduct regulation, to be technical about it, which can get a bit complex. So maybe we leave that there for now and we move on to talk about keeping your money safe in terms of managed funds. Thinking about regulation in our industry and managed fund providers like Simplicity, we're obviously fairly highly regulated, but can you explain in simple terms some of the different rules and relationships?
Yep. So there's basically two parts to the regulation. One is ensuring that the business itself is a stable business and it's going to be doing the right things to stay stable. And the other side of things is making sure it's going to be doing the right things for customers. So a business like Simplicity or any of the other managed funds providers has had to go through that licensing process where the FMA has said they've checked a whole bunch of things, but basically it's checking this is a business that's going to be around for a while, that is got the stability and the processes in place to look after your money and to make sure it's doing the right things. And then on an ongoing basis, it's checking the right boxes to do that. Now, for managed funds, it's even more regulated than that because it's not just the fund manager itself that's regulated.
Yeah, I mean, we've covered that in a couple of podcast episodes before, but all fund managers, which includes KiwiSaver providers, have what we call a supervisor, and they're a third party that makes sure the fund manager's doing the right thing, following the regulations, and then the supervisors themselves are monitored by the FMA. So you have both parts of that equation being regulated, and if you're thinking about KiwiSaver or any investments, if people are investing for the long term, they want to know that the rules and regulations are robust and are in place and being monitored over time. So that's all really important.
Yeah, and so it comes back to that concept of understanding what the risk is of investing. People sort of say, I want to avoid risk. Well, you want to take the right sort of risk. So the idea of regulation is to make sure you've really minimized the risk of the investment provider going insolvent, doing something wrong. But what the risk is you are taking is the risk on the underlying companies. So it's a portfolio that you've invested in through this managed fund, and it's those companies, how well they do, that is going to determine your investment. That layer of regulation is taking out that risk of the fund manager itself, of how the...
Because you're right, there are layers of risk, aren't there? There's the people and the companies that are looking after your money. We talked quite recently about the fund types, so from a defensive fund to a high growth fund, and how the level of risk increases due to the asset allocation. And then we've also talked about diversification, so mitigating risk by investing in as many different companies as possible. So there's a lot of risk to manage, but if you understand it and you understand that there's processes and rules out there to protect you at some level, then you can make a more informed decision.
Good risk and bad risk. It's the good risk you want to take is supporting that company that you believe those companies are going to grow. If they grow, then you benefit from that. Some will not grow.
Yeah.
But that's why you invest in lots across a portfolio.
Yeah. So that's the kind of the big players. What about more individuals? So because we can't give financial advice as a business, we suggest people talk to financial advisors if they have questions. Are advisors also regulated? Are there rules that they have to follow?
Absolutely. So every single advisor needs to be either licensed or working for a licensed business. And that means that they've got the skills and capability to give you advice about whatever it is that they're advising you on. And I think it's really important to understand what sort of advice they're giving you. So you have some advisors that might advise on a particular small set of products. So you need to understand, are they going to give you advice about just the KiwiSaver products from one provider, or are they going to give you advice about everything available in the market? As long as you understand that and you're happy with the advice they're going to give you, that's fine. But just understand it and then also think about how they're getting paid. Are you paying them directly? Or are they taking a fee from the person who you're buying the investment from? But I think financial advice where you're paying for that financial advisor, it can be out of the reach financially of a lot of people.
Yeah.
So it's important that there are other ways of getting financial education as the basic starting point, your KiwiSaver funds, an emergency fund in your bank, those sort of things everyone can put in place before you need to start
looking to a financial advisor. We're constantly recommending sorted.org, which is a government-backed website which has a huge range of information, and it really starts at the basics so people can kind of build up their knowledge. The FMA also has a lot of great educational material.
Absolutely.
So yes, I think there's lots you can learn before you reach out to a financial advisor. But if you do need one, because some people have very complex, complicated financial situations, maybe with family and things, it's always good to know what you should be looking for.
Yep. If you do get to that stage of looking for a financial advisor, again, just make sure you can look up on the FMO website, are they licensed? Are they working for a licensed business? Then you know you're in safe hands because the FMA has said, yes, this person is capable.
Are they monitored?
Absolutely.
Is their advice kind of looked at
yes, the FMA
or audited?
the FMA looks at not every single piece of advice, obviously, but they choose a selection of advisors and go and check them that they're acting in the best interests of the clients, the investor.
Great. And finally, the markets themselves, which obviously includes Catalist. How do the stock exchanges get regulated to make sure it's fair on those who are buying and selling shares? What protections are in place?
So NZX is the main stock exchange in New Zealand and Catalist is the stock exchange for smaller businesses. And essentially we're regulated so that the transactions that go through, buying and selling investments in companies, that is fair and transparent. So essentially there's two things there. It's the level of information that is given and the fact that when people are transacting those buy and sell transactions, that they're fair. Now, what do we mean by fair in the concept of a market? The two main things that people look out for are people who are trying to push the price around. You may have heard of market manipulation. There's been a couple of cases in New Zealand where we've heard of people deliberately trying to make money out of the market by either making it look like a price is going to go up and then taking advantage of that. So that is bad for everyone. The purpose of a stock exchange is to monitor the trading and make sure that doesn't happen. And that then flows through to a managed fund, for example. That managed fund will be investing in those companies. And so you need the stock exchange to be fair and all the information about those companies to come out.
And again, talking about transparency, that information is all publicly available.
Absolutely, yeah. So that's the reason why there's a lot more trading on publicly listed companies because they have an obligation to release everything that's material about that company. You know the financial situation of that company. You could then make a good assessment of whether it's likely to grow or perhaps it's not going to, and that affects your decision. If they're not listed on a stock exchange, then you may not have that same information. So I think when you're looking at regulation, one of the key takeaways is, again, if you're being offered investments, then look at what that investment is. Is it through a licensed provider like a KiwiSaver fund? Is it through a licensed stock exchange, a business that's listed on there? Or is it not? In which case, it doesn't necessarily mean that it's bad, but it might mean that you're going to get less information and it's probably higher risk. So that's definitely something to watch out for when you're looking at investments which might be offered to you from social media.
Okay, well, that was a high-level look at regulation of the finance industry. There's obviously a lot of detail that we haven't covered today, so maybe we'll do a regulation masterclass for another episode in the future. But we have looked at the fact that there are a lot of rules and regulations covering the financial sector. There are still some cowboys or cow people, I should say, out there.
Absolutely.
So it's worth doing your research. But in terms of the financial markets in New Zealand, the providers, the advisors, the banks, everyone's got a set of rules and regulations that they're working to. These are monitored and the information is there so that you can make more informed decisions, acknowledging there'll always be risk.
Any investment has some risk.
Yes, even putting your money under a mattress, but just understanding that puts you in a better position to make the decision that's right for you.
Absolutely.
Yeah. Okay, so that was a big download of information. I think that you made regulations and licensing and all that stuff quite interesting.
Well,
Actually,
I didn't hear
Colin.
any snoring from you, so well done.
So thanks very much, Colin. Do you think you'll come back for a third time?
Oh, if I'm invited, I'm sure I will.
We'll think of something. We'll think of a way to get you back. Next time, we'll be back to financial basics and we're going to be talking about kids and KiwiSaver. So make sure you tune in. Thanks so much, Colin, for making the time to chat with us and giving us so much valuable information. We'll catch you next time.
Thanks very much.
Thanks.
This podcast contains personal opinions and is intended to provide educational information only. It doesn't relate to your particular financial situation or goals and is not financial advice or recommendations. Simplicity New Zealand Limited is the issuer of the Simplicity KiwiSaver scheme and investment funds. For product disclosure statements, please visit Simplicity's website simplicity.kiwi.